compete for the profits, in this case the profits from currency issue. They have to attract customers, and so they have to give them some benefits for coming to their bank rather than to some other bank. And typically the way a bank gets more notes in circulation is to attract more depositors who will then use its ATMs or cash checks at its counter. And that means paying higher rates on deposits. So that's a benefit to consumers. There's another more sort of subtle behind-the-scenes benefit of having private currency notes, which is if it's a liability of a private commercial bank that you're holding, you're in a sense giving an interest-free loan to that bank, and what are they doing? They're intermediating those funds into business loans. Right? So you're supporting real capital formation. When you hold the note of a currency board, you're giving a profit to the currency board. What are they doing with it? They're giving it to the government. What's the government spending it on? Probably not as productive. Okay, some things governments do amount to capital formation, right? Building bridges and repairing roads, but that's a small fraction of what they do. So it's typically not as productive, intermediated into government debt as intermediated into business loans. And a former colleague of mine, George Selgin, and a colleague of his, who's an ace econometrician, did an empirical study looking at countries, developing countries, and asking, if we privatize the issue of currency and make a reasonable assumption about the productivity of private investment versus government spending, you come up with some pretty big impacts on economic growth. But if you want a more ancient authority on this, read Adam Smith, read The Wealth of Nations. Smith says, look around us in Scotland, how have we managed to catch up with England? How have we gotten rich? Well, one advantage we have is we have banks that have taken the sterile circulating medium of gold and silver coins, replaced it with banknotes, which allow them to intermediate that money into loans. So, if you want to put it really simply, we exported the gold and silver and we bought machines with it. Right? So we've been able to industrialize the economy that way. Ironically, Adam Smith is now pictured on the 20-pound note of the Bank of England when he was a critic of the Bank of England. Didn't think its monopoly privileges were justified, described it as a great engine of the state, which I don't think was a compliment coming from Adam Smith. Okay, so to wrap it up, I think the Bahamian economy will do better from the perspective of the people who live and work here, who use money here, with a firmer link to the most natural external monetary standard, which is the US dollar, right, to which Bahamian currency is already weakly pegged. But private banknotes are more reliable as claims to US dollars than currency board notes are. And there are basically two reasons for that. So I think it's an even stronger commitment if it's private because, one, a commercial bank that fails to honor its redemption to redeem on demand at par can be sued. You have a legal remedy. Right? A currency board that fails to redeem at par on demand, and it's happened when they've been pressured by their governments, you can't sue them. They've got sovereign immunity. A central bank that devalues, you won't be hurt at all. But secondly, the fact that there's competition means that a bank that's concerned about maintaining its reputation has to behave in ways that don't scare people about its long-run sustainability. That they have to continuously monitor the demand for their currency and not supply any more than people want to hold, because otherwise it'll come back to them for redemption, and they don't want to get into a precarious position where their reserves are running out. George Selgin, who I mentioned earlier, and I co-authored an essay which is available on the Liberty Fund's website entitled "Why Private Banks and Not Central Banks Should Issue Currency," subtitle, "Especially in Less Developed Countries." So I refer you to that for more detail on this argument. Do we need a central bank for other purposes? No. Before there were central banks, banking systems worked perfectly well. They provided check clearing and note exchange services for themselves through sort of member clubs, commercial bank clearinghouse associations. And clearinghouse associations discovered pretty quickly that they also had to provide some regulation, but not top-down regulation whether you like it or not, regulation to which all the members of the clearing association agreed. And why would they agree to a regulation? Why would they agree to have to meet some kind of standards or guidelines? Well, because they wanted the other banks to have to agree to them too. If you're in a commitment to accept notes issued by other banks, accept checks for deposits issued by other banks, you want some assurance that those other banks are going to be good for the money at the end of the day. So you need them, well, first thing you do, you ask to see their balance sheet. Right? So clearinghouses had minimum standards for how much capital a bank had to have, and they required banks to submit their balance sheets. But there's a problem there. How do you know the balance sheet is honest? So the next thing clearinghouses did was they came up with an idea called bank examination. Bank examination is nowadays conducted by governments, but it wasn't originally. It was conducted by clearinghouse associations. And they set up schools to train bank auditors and instruct them, you know, here's what you need to report to the clearinghouse association. Here's what you need to keep confidential. We don't need to know who they're lending money to, but we need to know, are the loans good? We need to know, is the bank solvent? And banks agreed to let examiners in because that was part of the deal. That meant that they were part of a club which was examining all the members, and that was a better club to be a member of. You may remember the famous line of Groucho Marx, I would never want to be a member of a club that would have me as a member. So you don't want to be a member of a clearinghouse association that lets just anybody in without concern for its being adequately capitalized. So the system we moved into where all the reserves in the banking system were centralized in a central bank, that was not a natural development. That was the result of legal privileges being piled on the Bank of England and then that model being imitated by other countries. It was not the Victorian authority, Walter Bagehot, said, our one reserve system was not deliberately founded upon definite reasons. It was the gradual consequence of many singular events and of an accumulation of legal privileges on a single bank which has not been altered and which no one would now defend. But, you know, we're stuck with it. And Bagehot kind of musingly said, now, am I recommending that we should overthrow the Bank of England and go back to a free banking system? He said, I might as well propose that we abolish the monarchy in Great Britain and become a republic. You know, it's ridiculous. Nobody would listen to me. Probably more people would be willing to throw out the monarchy than would be willing to throw out the Bank of England, even today, I suspect. So the central bank's not needed for bank regulation. It's not needed for clearing purposes. Banks can do that themselves. It's not needed to be a lender of last resort. Commercial bank clearinghouse associations can organize that too. They can organize interbank loans because they have timely information on who's solvent, who's in a position to repay a loan, and that's what the lender needs to know. So here's my modest proposal. It would be a good thing for the Bahamas to have a more credibly fixed or super fixed exchange rate. That would better safeguard the value of money. It would better allow free convertibility, no more indignity of exchange controls. So I think a currency board based on the US dollar would be an improvement over a weak peg. And I think privatization of dollar redeemable currency would be even an improvement over the currency board. But even if you don't go that far with me, you could accept the argument that the currency board is better than a weakly pegged central bank. But you don't need to impose either kind of system from the top down. So you don't need to abolish the Central Bank of the Bahamas right away. Let them continue to issue their notes, but stop them from suppressing their competitors. Allow US dollars to circulate in parallel with Bahamian dollars, and allow private commercial banks to issue banknotes presumably redeemable for US dollars. If they want to issue banknotes redeemable for euros, fine. I don't think they'd find much of a market here. So the Bahamas citizens should be free to hold, and commercial banks should be free to issue account balances denominated in whatever currency, currency notes denominated in whatever currency. And I predict the US dollar would be the most popular, but I wouldn't restrict that by law. So if citizens prefer Federal Reserve notes to Bahamian dollar.